much like day before, yesterday too, the markets had a quiet start and then picked up a little bit. Having said that, the financials and banks didn't quite support the way they did a day before, which is why you had a little bit of sectoral rotation take place, and the market didn't do all that well as we did day before, but nonetheless we managed to pretty much close around the highest point of the day, a gain of about 71 odd points coming in for the index alone. Yesterday, of course, the story was in pharma. We'll discuss all that a little later. First, let's try and understand what the global setup is like, because that's exactly what pegged us back yesterday as well. Remember, there was that weak handover, global markets were trailing, the Japanese fiscal deficit print, the kind of impact that it had on yen, all of that did keep the global markets at bay. Today, of course, there's heightened talk about whether or not there is going to be a September rate cut. The FOMC minutes, they indicate that a vast majority does point towards a rate cut in September if the data were to support appropriate cut in September is going to be taken. No rate cut in September, though, if the economy would drag. So many saw a plausible case for a quarter point cut in the month of July itself. That hasn't happened. So now all eyes on September.
Yeah, the jobs data also is something which would be crucial to understand that, what it means for the economy. And typically, more than the Fed communication, I think it's the US jobs data, which in a sense is occupying the center stage, so to speak, because we are looking at a massive revision in the jobs data. And that clearly means that the economy is not doing all that well. So has Fed done over tightening? If that is the case, then there should be, clearly, nervousness in the market. So if you really look at the two other indicators, which is the bond yield and the dollar index along with crude is almost at 101 now. Bond yield is in and around 4. It has not gone back to its peak levels. Even the equity markets have gone back to its peak levels. And the VIX is at 16. And just throw in the crude here. I'm especially looking at Brent here, decisively below $80 now. Decisively below $80. So commodities are down. Dollar index is down, which is quite a reverse. But more than the Fed communication, I think it's the US jobs data, which in a sense now suddenly seems to be the talking point.
Yeah, absolutely. In fact, if you just take a look at how much the global markets have pegged off from their life highs, Shanghai, of course, still is very much in the negative. It's still down about 53% from its life highs. And this is just the index alone. I'm not talking about individual sectors, and I'm just talking about the main board indexes here. Japan is well lower, a good 10.5%. Hong Kong is still off 48% from its lifetime peak. And that's pretty much the case with the Nasdaq as well, still 4% off. FTSE is down 2.25% away from its all-time high. And the Nifty about 1.25%, exactly in par with the Dow. So let's see, we're pretty much at the same level away from our all-time peak as the Dow. So let's see which way the global markets head, because we are more in sync with what the US equities, of course, have been doing. But talking about our markets and just looking at the cues from the street, the fact that we're just about 300 points away from that all-time high, the sectoral churn, that continues, and yesterday as well, you had the small and mid caps did take that advance. Having said that, banks, I think, Nikunj, are at the focal point, because day before when the markets moved up after that quiet start, it was the banks and financials which gave us the leg up. But HDFC Bank, that continues to drag the Nifty Bank lower. And I think the key is for the banks to participate for the markets to move higher.
Yeah, so, you've had 5 days of positive move on the Nifty per se, but that is not translating into, so this positive move is not backed by any euphoric jump. This week, in a sense, we've seen 3 trading sessions. Last week was a big Thursday, but apart from that, we've not seen a really, big jump, so to speak. And there are cracks which are opening up in the market now. So it is not like a rising tide phenomenon which seems to be taking everything up. I think it is evident in the way how markets are moving that markets are being very selective. Markets are being very, Markets are being very choosy in what is going up and what is going down. At the same time, when banks are not participating, defense has started correcting, FMCG has started outperforming, IT has recovered very smartly from the lows. So it's not a market where you can say, okay, it's like a real great bull market which is at play, like what we saw in the month of July, or what we saw, let's say, in the month of June post election, where just about everything and anything was going up. Interestingly, here for me is one sector which is standing out, and this is where I'm surprised, are metals. Because globally, if anything at all, metal prices are trading with a downward bias. And if metal prices are trading with a downward bias, then why are steel stocks going higher? Why are metal stocks going higher? That is something which really needs to be seen. But barring that, I think banks are down because FIs are selling. Defense stocks and railway stocks are down because in general HNI are booking profits, and FMCG stocks are up largely because inflation is down, commodity prices are down, rural economy is strong, and there is a play in terms of the monsoon effect there.
Yeah, absolutely. And let's talk stocks. Today, of course, it's going to be all about Zomato. The fact that they're charting a new course right now, and Paytm is going to be selling its entertainment ticketing business to Zomato now for a consideration of 2,048 crore rupees. Now, remember, this acquisition does bolster Zomato's presence in India's vast online ticketing market for movies, live events, which currently is dominated by other players and peers like a Reliance-backed Book My Show, so far at least. But wondering how the street is actually going to absorb this.
So, more than Zomato, I think which is Paytm, which you need to understand, what it means for Paytm. Now, Paytm clearly will get cash in its balance sheet. Second, for Paytm, it is evident now that they can really focus on that payment aggregator license. And see, it clearly means that Paytm as a company now really needs to get much more focus. Now, Zomato is paying 2,000 crores, so it's not like a small acquisition, less than $500 million, but that's a sizable acquisition because that cash automatically gets out from the balance sheet of Zomato. There would be some receivables here, but that really needs to be adjusted. But is Zomato, for the first time now, is moving outside what really could be called as their cohort, which is their comfort or the extension after food delivery into the grocery business was anything which has got to do with quick commerce, or it was anything to do with delivery. You delivering food, you started delivering groceries. Now we are moving into a service which I think they've already gone on record and said that they will call it district, which really would be an extension of, if you're ordering a pizza, you want to order perhaps something else with it, maybe buy a movie ticket. So that I think is the thought here. So let's see how this business in a sense evolves, because this is a business which has got very, very different dynamics. The competitive intensity would also be there. Can Zomato really turn it around? They've demonstrated excellence in the past of turning around Blinkit when everyone questioned it, but that was an extension of the food delivery business. This is a completely different kettle of fish. Will it take time, or this is something they can turn around given that the reach and the presence what they have? I mean, the advantage what they have is that they have a lot of reach now and they have technology, but can they really scale it up to what they've done to the food delivery business and also to the quick commerce business?
If you like this video, then like, share and subscribe to ET Now.